Okay, this is another illustration on computing the capital gains. So Mr. Ranade provides the following information: particulars of the asset transferred by him during previous year ended 31st March 2020. So previous year is 1920. You are required to compute his income from capital gains chargeable to tax for assessment year 2021. Okay. So previous year is 1920. So assessment year will be obviously 2021. Clear? Now details are given in the next slide. If you will see, residential house in Delhi purchased on 11th November 2001. So date of purchase it will come under year 2001 2. Okay, so he has purchased the house for 14,54,000 in 2001 2. Residential house he is transferring means this will come under category of land and building. Okay, residential house will come under which category? Land and building category. And this house was sold on 16th January 2020 for 1 crore 46 lakh 50,000. And other expenses for transfer is incurred is 50,000. We have to calculate the capital gain based on these details. Okay. So understood everybody the question? Residential house property in Delhi. It was purchased in 2001 to for 14,54,000. Sold in 2019-20 for 1 crore 46 lakh 50,000. Expenses incurred in connection with the transfer is 50,000. So based on this detail, we will calculate the capital gain of Mr. Ranade. First, we will always, while solving the capital gain problems, so we will have to first find out whether the capital gain is a long-term capital gain or a short-term capital gain. Based on that only we can calculate the capital gain. Based on that only we can decide whether it will be indexed cost or normal cost. Indexation benefit will be applicable only for long-term capital gain. For short-term capital gain, indexation benefit is not available. So first, always we will have to find out whether the capital gain is a long-term capital gain or a short-term capital gain. Okay. So Mr. Ranade, name of the SSC, previous year 1920 and assessment year will be 2021. Capital asset is residential property. So it will come under category of land and building. And anybody tell me what is will be the period of holding for land to become long-term capital gain? Land and building will become long-term. What should be the period of holding for land and building category? Three categories we have seen: listed securities, land and building, and other category. So land and building will become long-term if period of holding is more than how many months? Land and building will become long-term if it is held for more than 24 months. Correct. So land and building, if NCC is holding it for 24 months from date of purchase to date of sales, that is called as period of holding. It will become longer. Now let us check whether this house property which Ranade has sold in 1920 is long-term or short-term. See, year of purchase is 2001 to year of sale is 1920. So for how many years approximately is holding the property? For 18 years. Okay. And we know that land and building will become long-term if it is held for more than 24 months, means around 2 years. Okay. So here date of purchase is year 2001 to year of sale is 1920 and it is approximately 18 years, around 18 years. So this will be a long term only, obviously, because we know that minimum requirement is 24 months and 1 day, which will be 2 years, 1 day. Okay. So the nature of capital gain will be long-term capital gain. Clear everybody this much? First, we have understood whether the capital gain will be long-term or short-term. So this everybody note down this much part. Then we will go with the illustration. Understood everybody this much. And noted now why it will be a long term. Everybody understood because period of holding is 70, 18 years. So obviously it will be long term. Okay. Everybody noted down also. Okay. Now we'll go for the solution. Actual calculation of long term capital gain. So computation of long term capital gain, we will start with the sale consideration. What is the sale consideration? 1 crore 46 lakh 50,000. So he is selling the residential house property for 1 crore 46 lakh 50,000. So he is selling the house property for 1 crore 46 lakh 50,000. This is the sale consideration. Now, since this is the long term capital gain, so indexation benefit we will get. So for indexation benefit, what is required? Cost inflation index. We have seen in the last illustration also. So cost inflation index will be required for 2 years, year of purchase and year of sale. Both are given. Year of purchase 2001 to year of sale is also given. Correct. So year of purchase and year of sale. Year of purchase 100, year of sale 289 means item which you could purchase for 100 rupees in 2001 to same item will cost 289. So here house property of purchase in 1 2 for 14 lakh 54,000. So what will be its current year cost in 1920? That we will have to find out. That is the meaning of indexed cost. Okay, 100 rupees is becoming 289. So how much 14 lakh 54,000 will become? So how we can calculate? We will use the cross multiplication approach to see 2001 to 100, 2019, 20, 218. So what will 14 lakh 54,000 will become in 1920? That we will have to calculate. So how we can calculate? By doing cross multiplication. So calculate this part, you will get this indexed cost 42 lakh 2060. Everybody calculate this cross multiplication. Everybody is getting this value 42 lakh 2060. 14 lakh 54,000 is the purchase cost given in the question. 14 lakh 54,000 purchase cost in 2001 to Understood. That purchase cost only will increase using these two factors in cost inflation index. Everybody got yes or no? 42 lakh 2060. By doing cross multiplication, you should get this value. Okay. Now there is one more cost to see. Transfer expenses 50,000. That also will reduce. So we'll get our long-term capital gain. Sale consideration minus indexed cost minus transfer expenses. So capital gain, long-term capital gain will be 1 crore 3,97,940. So everybody do till here. Okay. Till here everybody do. You should get this capital gain, long-term capital gain 1 crore 3,97,940. Now, capital gain is 1 crore 3,97,940 rupees is the capital gain. Now, on this income tax rate applicable is 20% plus 4% will be the education and higher education cess on the tax amount. So you can imagine how much amount will be the tax on 1 crore 3,97,000. If you will take 20%, then on that if you will add 4%, amount of tax will be very huge. Okay. Now, for avoiding that, income tax has given various benefits to the assessees, which is known as deductions from capital gain. Benefits to the assessee. So Income Tax Act says that if you will use this amount of consideration for making investment in new house property. So there are various options available. Two important options we are discussing. If you will invest this amount in new house property, means imagine Mr. Ranade sold this old house property in Delhi for 1 crore 46,50,000 and he has purchased a new house property. Okay. Using this entire amount of more amount. Second, he can make investment in some securities. Okay. He can make investment in some bonds, securities. Okay. Like national Highway Authorities of India, if they are issuing some bonds, he can make investment in that. Or Rural Electrification Corporation, if they are issuing some bonds. If investment is made in these bonds, you will get the benefit of capital gain. So no need of paying capital gain if you are making investment in these bonds or you are making investment in new house property. Okay. So this is the benefit given to the SSCs if they make use of this amount which they are receiving by making some investment. There are various other areas also, but two important things which we have discussed is more popular is you can invest in the new house property. So if you will invest this entire amount in purchasing a new house property, then your capital gain will be zero. Okay. Because you have used this amount for investing in new house property, but there are various other conditions also that you have to keep that house property for 3 years, etc. We are not going into that much depth. Okay. Or your other option is you can invest in the bonds issued by NHA or REC up to 50 lakh rupees. You can make investment in these securities in a financial year. So see, here is Mr. Ranade wants to avoid paying tax on this huge amount. What he can do, either he can invest this amount in new house property or he can invest in some bonds, etc. If you will see, one detail is given in the question. See. Read this part. Mr. Ranade made the following investment out of the capital gain arising sale of his residential house. So he has invested in a rural electrification bond for 3 years. 10 lakh rupees he has invested. Okay, so if he's investing in rural electrification bond, that much benefit he will get. So we will reduce that amount and his revised capital gain will be 93,97,000. Because Mr. Ranade has invested 10 lakh rupees in rural electrification bond, which is an allowed benefit investment. So from this 1 crore 3,97,940, we will reduce 10 lakh and the revised capital gain will be 93,97,940. Now here Mr. Ranade is investing only 10 lakh, but he could have invested up to 50 lakhs. That much amount is allowed. Maximum amount which you can invest in these bonds is up to 50 lakhs. And his consideration is 1 crore 46 lakh. So he could have easily invested up to 50 lakhs and saved more tax. But here in this question, it is 10 lakh only. So that we will consider. But for purpose of understanding, you can understand that up to 50 lakh rupees he can invest in these bonds. And obviously he could have invested because his consideration is 1 crore 46 lakhs. So out of this, he could have easily invested 50 lakhs rupees and he could have earned more benefit. Okay, so this is how you have to calculate the capital gains. Understood? This much, everybody. So today we are stopping here. One more illustration we will take on capital gain in the next case.